Hey. Just kidding. Hey, everybody. Welcome back to another episode of Real Talk with Realtors about real things and real stuff. Yeah, something like that.
Your host, Kelsey and Brandi. Mm-hmm. And today, what are we talking about, Bran?
We are talking about a couple different things. Basically, the 2023 market forecast, which, of course, nobody has the crystal ball that we always talk about, but we do have some information. We can look at history. We can look at graphs. We can look and see what all the smart people are saying.
All those economists out there.
Yeah.
Housing economists.
The smart people.
There's a lot more than you think there are. I'm always like, oh, these 7 housing economists, and then
some of them we don't even know, like, who's that?
Haven't heard of them, but then there's really like 30 different, I don't even know.
Right.
Anyways, we're going to pay attention to what Keeping Current Matters is telling us.
Right.
They kind of take information from, it looks like about 7 or 8 economists, housing economists, main players in the game, and look at what all their predictions are and tell us. So we can tell you.
And I don't think we specifically have a graph to show you on the predictions of rates right now, but everybody's kind of saying they hope that it's going to stay right around the 6.5 range for 2023. So We'll see. We'll see how that all shakes out.
Yeah, because right now the feds are they are incrementally, at least right now, raising rates in order to slow inflation, which in turn raises mortgage rates. Mm-hmm. But it sounds like it's just not going to be as much movement next year as it was this last year.
Right.
If that makes
sense.
Dun,
dun. Who knows?
So we really don't know. I mean, last year, this time, January of last year, we were saying, oh my gosh, what if the rates get into the 5s? It's definitely going to be 5% by the end of the year. And then within like 2 months, it was over 5%. Mm-hmm. So with that being said, we really don't have a great prediction for mortgage rates next year. I would just, hold on to hope there.
Exactly. And we can talk a little bit about what's happened in the past. So in 2021, nearly 6.9 million homes sold.
In 2022?
I'm sorry, no, in 2021. In 2022, 5.8 million.
Ooh.
In 2023, the prediction is 5.1 million. So that's about 12% fewer sales than 2022 than this year or last year.
Yes. And this is nationally.
Yes, nationally speaking. So we will have fewer home sales. It will be a more balanced market. What I find really interesting is what we've talked about in the past is the fact that there's not a lot of sellers out there. We still have a low inventory.
Yep.
So there's not a lot of sellers, but there's also maybe not a lot of buyers.
Not as many buyers as there have been.
Right.
Yeah.
Right. So, I mean, not that we want to get into the whole buying opportunity thing, but I don't know that there's been a time in history that I have heard about on any of the podcasts or things that I listen to where it has been like this, where the sellers aren't going to sell, most likely aren't going to sell because they have a 3% interest rate.
Yep. It's really an anomaly. Like, this is the first housing shift where we have this variable of low inventory.
Yeah. It's like 2 cars that are riding towards each other. Who's going to ditch out first? No.
The buyers or the sellers.
Yeah.
So with that being said, we have lost a lot of our buyers. And it felt like if you were a realtor, it felt like you were running, and then just like hit a boulder. And it really slowed down. All of a sudden, we lost, I want to say 20% of buyers maybe fell out of the market when interest rates went up. But it is, with that being said, more of a normal market. We were just not used to that for the last, in Chico, really since the fire. So 2019, 2020, 2021, and 2022 were fire hose markets.
Right.
And now we're just kind of back to pre-2019.
Right.
So
Chico. It's still, a great market, but you're right. We aren't running around like chickens with our heads cut off trying to figure out how our buyer's going to get into a home, and that's where that opportunity lies for that buyer, because they aren't going to be paying $20,000, $30,000, $40,000, $50,000 over asking. Right. But it's I think with the fewer sales, it's interesting because if you look at our business alone, I mean, basically net profit of the company was about the same as it was last year.
Which means
prices went up. So yeah, it's just, the whole thing is a little bit baffling to me. Or it's almost like you're watching a movie and you're trying to figure out the end of it and you can't.
Or there's like a major twist coming that you don't know about.
Right, exactly.
I
So
know.
it's also interesting. But at the end of the day, people that need to buy homes are going to, and people that need to sell homes are going to.
Yep,
So.
exactly. So we're going to reiterate so far, see interest rates probably stay in the sixes, probably below 6.5%. We are going to see 12% less home sales next year than we did this year. So, which probably in turn means maybe some realtors are going to be getting out of the business. Those who maybe don't sell as much are not going to be as motivated to continue on in this changed market. And what are we going to see for home prices?
Well, it depends on who you ask, Kelsey.
Ain't that the truth?
So there's, what are there, 7? And I mean, so they asked realtor.com, which I find out is interesting because, I don't know, to me that it's kind of like asking a realtor. NAR, I don't know what some of these other ones are, but NAR, Freddie Mac, Fannie Mae, and Zellman. And it's basically like 50-50. Realtor.com thinks we're going to go up appreciate 5%. And then Zellman thinks we're going to depreciate by 5% roughly, right?
So there is a big spread there, a big difference. But the average of all 7 forecasts from these players is 0.4%. So in other words, we're going to stay pretty dang level with where we're at right now. And that feels right to me. That feels like a correct prediction.
It does. And it should happen.
Yeah.
It feels like we needed to have this correction. I think the longer that certain homes specifically that stay on the market longer, their prices are probably going to go down. But I also feel like sellers and us realtors aren't pricing correctly. We're still pricing high because we're just not used to it. Not all of them. We've seen multiple offers on some properties. So everybody's just trying to get used to this.
Everybody's trying to get used to it. And to be a realtor trying to explain to a seller who maybe hasn't even been following the market lately or what, I don't know, but just trying to explain to them that their house isn't worth as much as what they thought it is or was is really, really challenging. And you really have to be confident in what you're saying to present
And
that.
on the other hand, explaining to a buyer that if a property is priced fairly, you can't go in under, $40,000 under asking.
So true.
It really just depends on how long it's been sitting on the market.
Yeah.
But
when it comes to
it's an interesting balance.
Yep.
And I think that this year, 2023, people are going to settle in, get used to it.
Yep.
This is the rate.
Yep. Exactly.
It's not going back. So if you do have a big life change and you need to act on it, as long as you can afford it, I think that's the right thing to do. Or whether you're buying or selling, whether
death, divorce, marriage, babies, diploma. Is that it? I think those are the major life changes.
Those are some major life changes. Yeah.
Those are the people that are going to be selling. But so what do these predictions mean if you're a buyer? How is it applicable to you? If you're on the fence right now, should you buy next year?
Yeah, you definitely have to feel comfortable about it. I think a lot of people are just worried about uncertainty. And again, nobody really knows. But if you are going to stay in the property for longer than 3 to 5 years, I would say 5 years is really comfortable, then yes, you should buy it. You're going to kick yourself.
I know.
If 5 years later you didn't and prices have gone up.
Yeah.
But if prices have leveled, if they're still the same value, you have to pay to live somewhere.
You have to pay to live somewhere. Exactly. Like you might as well be investing your money and paying yourself rather than paying somebody else's mortgage.
Right. But it's highly unlikely that you would not have equity within 5 years.
Yeah, agreed. I mean, the example I always use is people who bought in 2008 and the worst time in the highest market, when you were living through that time, you probably felt horrible about yourself for making that decision before the crash, are still making money today on those same properties.
Yeah.
Like that's crazy.
Yeah, no, real estate has historically been a great investment. So it's great because some people it's your home, you're making memories there, you're raising your kids there, so there's an emotional attachment as well, but it is also a great financial investment.
Yeah, it definitely means more than just a piggy bank for people. So that plays a large role in that decision. What about for sellers? What does it mean for sellers?
What does it mean for sellers? Well, it depends on where you're at in your life, right?
Yeah.
I mean, if you have a 3% interest rate and you're comfortable in your home, by all means, stay there. I would too.
Yeah.
But if you can't manage the yard or don't want to deal with the yard anymore, I have some clients that don't want to be on acreage anymore. They want a smaller property. You just have to balance whether it's worth it to you.
Yeah, absolutely.
To downsize.
And I think if you're a seller, have your realtor bring the stats to you so that way you can really see what prices are doing in your local marketplace.
Yeah.
And price your home based off of that and based off of very, very recent comps and then just overall statistics of what prices are doing in your area.
Exactly. No, you need to make sure that you have all that information and talk to your lender.
Yeah.
Because there's all sorts of different options that is a whole nother episode.
Yeah.
In terms of what you can do, and the adjustable rates are becoming popular again. So there's a lot of different options if you really want to move, but you're afraid to I don't want to leave. I mean, that is nice. It's attractive to have that low rate.
Right.
It's
I know.
hard to break up with.
It is hard to break up with.
But you know what you could do? You could just say, I'm going to rent this out.
Yeah.
Or if you don't own anything, you're not worried about the rate, but you could always do an owner carry.
Yeah.
And make some money on the house if you own it free and clear.
There's another way to make money in real estate.
Yeah, right. But you could rent it it depends on the property. One with acreage is not probably as rentable as, something standard 3-2.
Yeah.
You could make some money from it if you just want to make a change.
Yeah,
as long as you qualify for both properties, of course.
Yeah, so that's why you want to talk to your lender about that option or tapping into the equity, or there's so many different things. A bridge loan if you didn't want to have to sell. There's lots of products out there.
Yeah, so I would say for both buyer and seller, it really just depends on your situation at the end of the day.
Yeah, agreed. All right, do you have anything else?
I don't think so. I hope that everybody has a fantastic 2023, and I look forward to doing more podcasts with you.
Yeah, me too. Thanks.
All right, cool. Well, see you next time.
We're always laughing at the end because we never know what to say. Wrap it up. Thanks for tuning in.